Hey guys, Chills Day here with Chrono Historia. Today we're going to be talking about using volume sizing to tell if retail traders are trading a stock. This is important to you guys because if you can tell that retail traders are trading a stock, you know the competency level of the average trader that is buying and selling a security that you're trying to take a position in. And if you know this, you can devise a trading strategy that will make you money irregardless of which way the stock's price goes. Just because if you already know one variable, which is that retail traders are trading it, you can thus make a strategy that will, make you money. So this is a popular methodology using that the street uses, and I'm going to go right into it. Now we're just going to break down really fast what retail traders are, uh, how to determine using level 2 if retail traders are buying and selling a stock, and how to tell if institutional investors are buying and selling a stock. And once you know what you're looking for, this is going to take you hardly any time at all, and you can even build computer algorithms using Python and Pandas to kind of automate a lot of this process. So let's jump right into it. All right, so you can tell if retail traders are trading stock by looking at volume sizing counts on a stock. If you see weird volume sizing instead of normal rounded share counts, then retail traders are trading the stock. And what I mean by this is retail traders, how they calculate a position is they'll say, okay, my portfolio is worth $10,000. I want to put $1,000 into this. And what is $1,000 worth of this stock? So let's say it's 22 shares or something, right? Institutional investors are not going to do that. They do it the reverse way. They say, hey, we want to put $10,000 into this position. How many shares is that? And it ends up being more and more round counts. So I'll show you what I mean by that in a second. But pretty much if you see volume trading sizing that are like 22, 54, 135, 4,766 shares or something like that, that's a retail trader. Institutional traders will have like 100, 1,000, 10,000, nice round numbers because it makes it easier in programs that they build, algorithms they build, and also end of day like counting out. So let's jump right into it. So retail traders, why do they matter? Well, retail traders matter because since the 90s, the amount of retail traders in the market have been exploding. This is because of online trading and gurus coming from the market left and right. Um, it's been pushing a lot of people into the stock market, and that's a good thing because when everyone makes money, everyone's happy. The downside is people have been kind of misled how to do this. A lot of retail traders only really know how to do two things, and that's buy and sell. Um, a retail trader is pretty much anybody who is just someone who trades in the market that is not part of an institutional trader. And as you can imagine, like I'm a retail trader, right? I don't represent a firm right now. I don't represent clients. I represent my own portfolios. I'm a retail trader. I'm out there representing myself and my own financial interests. Institutional investing firms are like hedge funds, wealth management people, people who manage money or they're putting their money where their mouth is and they own a lot of it. The banks, stuff like that. Um, so what this means is retail traders have a wide range of like skills, you could say. Some of them will shake a magic 8 ball and predict that a stock's going to go up and they'll invest off of that. Some of them will just they might hear their buddy talk about it and invest off that. That's investor sentiment analysis, and we can go into how that works later. But essentially, what you need to know is that if a bunch of retail traders are trading a stock, like the average valuation that you'd use, like DCFs and stuff, don't apply anymore. With more and more retail traders trading, crazy stuff like it, social media will drive the stock more than actual valuations. And therefore, if you think about it, if we know more and more retail traders are trading a stock, we know that the valuation is further and further off from what it actually should be, whether that's up or down. And there are actually ways you can trade off of that and make pretty much guaranteed money. Nothing's guaranteed, but if I told you have a 95% chance of making money, it's pretty much guaranteed. So let's look at this. GameStop was one that me and a couple people on the street were looking at in early January. I made a lot of money off this, not everyone else did. And how you figured this out was through investor sentiment analysis. So we were looking at things like social media. We built algorithms to kind of capture uh, where people were talking on social media, whether that would be like YouTube channels or Reddit or stock Twitter, stuff like that. And you compile it all to figure out who is paying attention to what. And then we just assume that like the average retail investor only knows how to buy and sell, so they'll buy and eventually inflate it. But that's we could talk for hours on how that stuff works. We're getting straight down to this. So we're going to be looking at the time and sales chart. This is called a level 2 ticker. Um, time and sales level 2. Some broker firms kind of combine them. So let me show you what I mean. On the screen right here, we have a retail trader's time and sales chart. So we have three columns: time, price, sizing, right? So the time here this is taking in around noon, 12:15, 12:15, 12:15. As you can see, there's a high frequency trading. This is in one span of a minute we've had, a couple thousand shares being traded. But as you can see here, like up here at the top, we have 47 shares. That's a retail trader. 100 shares, that's more of an institution. 4 shares, retail trader. 50 shares is probably an institution. 7 shares, retail trader. 100 shares, institution. You go down this. 16 shares is not a round number. 31 shares is not a round number. 14 shares is not a round number. 5 shares is not a round number. Things like hundreds, 400s, 500s, 200s, 400s, 100s. Those are institutions. So if you look at this, time in sales, and all you see are just red 100s, 200s, 300s, or green red 100s, 200s, 300s. That's institutions buying and selling the stock. Um, if you see a lot of these like random numbers, that's going to be retail traders. So we did this recently with Smile Direct Club, SDC. Um, we saw that more and more retail traders on social media were starting to look at the stock, starting to kind of ping things within our algorithm, certain keywords and variables. And then we just followed the level 2. We exported all this data for a couple days, all these sales. We had thousands and thousands of level 2 data. And then all we did was pump it into an algorithm to track how many people, how many institutional investors are trading it, and then how many retail traders are trading it. And you can create a plot chart over time that eventually would show you that retail traders were continuing up and up and up. And you can invest off that, which is what we did. So let me show you what I'm talking about. Off of that Smile Direct Club investment, here we go. In this little pump up here on a Tuesday, we saw, this was in September, by the way, 2021, we saw that retail traders are starting to influence the price more and more and more, and then it crunched down, and more institutional traders, when it came to a lull, started impacting the stock. And then around here, when I published this article, we started to notice it flipped. Retail traders starting to pay more and more attention, but now the float and volume is stacked against the institutional traders. And as such, we took out a long OTM option and made a lot of money off of it. If you want to see the article, I have it linked up here on Chrono Historia. So you can go over the entire thing, how we went around the analysis, the methodology, placing the order and exiting the order, all that good jazz. We go over. But these types of methodologies are, once you know what you're looking for, it becomes easy, right? I'm not going to sell you a course on how to do this or anything like that. It's just at Chrono Historia, you can just look at it. We talk about it. We're all about stock markets and how to position investments to make the most return possible. So this is an example of predicting retail traders within an investment. Retail traders are where all the money is going to be at in the next 10, 15 years, because more and more people are getting into the market than ever before, and it's becoming more of a fair market. So if you arm yourself with the right knowledge, if you arm yourself with the right methodologies, principles, and you know what you're looking for, you will make money, and that's a good thing for everybody. So here at Chrono Historia, my name is Jill Day. We are in the business of making other people successful. We also invest our own money, but we're here to help you guys generate alpha within your portfolios. Alpha is above average market returns. So if a market only returns 9.25%, as the U.S. market over the past 100 years has done, and we get you 15% return per year, and we show you how to do that, then guess what? You got alpha in your portfolio. And then the next thing is how to manage risk. So all this stuff kind of fits together. And yeah, so if you ever are interested, hop on over to chronohistoria.com. We have a free newsletter you can sign up for just to keep yourself up to date. And until next time, best of luck on your investing journey. And this is Children Day signing off.